Okay, thank you very much for a few of you staying around for the Lucara story. Just moving right ahead, I will be making some cautionary statements, so I'll leave you with that to read on our website. For those of you guys that don't know the Lucara story, we own 100% of the Karowe mine in Botswana. It's northeast of Gaborone in the Arapa region. What makes our mine unique is the fact it's a high-margin, large stone producer. We've been in operation since 2012, produced 2.6 million carats, and produced about 1.5 billion of revenue from that in under 7 years. Total capital invested was about 200 million, and from that, we've been able to pay 271 million in dividends since 2014. As I mentioned before, we consistently recover high-value diamonds that we call specials in the industry of plus 10.8 carats. And we were the first diamond mine to implement state-of-the-art XRT technology, which allows us to recover these stones unbroken. We are the only mine in history, in recorded history, to have recovered 2 diamonds greater than 2,000 carats. And this is one of them, the Sewelô, which means rare find. We recovered it in April last year at 1,758 carats. It is the largest near-gem quality diamond recovered in Botswana. And a couple weeks ago, we were very happy to announce a collaboration agreement with Louis Vuitton and HB Company, a diamond manufacturing group out of Antwerp, to collaborate on creating a polished diamond collection from the stone. We will go on to sell this collection, with Lucara reaping 50% of the proceeds of the polished collection. And Louis Vuitton is going to go on to create a historic jewelry collection from this as well. Well, they'll give us back 5% of the net retail proceeds to invest back into Botswana in some of the community-based initiatives we've been working on. These are some of our other famous recoveries from Karowe, the Lesedi La Rona at 1,109 carats, and the Constellation at 813 carats. The Constellation we received 63 million for, which is the largest amount ever received for a rough stone, and the Lesedi is the second largest gem ever recovered in the world. And this is what they've turned into. This photo here shows you what the Lesedi was cut into, a 302 carat diamond, decolored, and they also cut 66 other satellite diamonds from that. The Constellation was even bigger. It's been cut into 313 emerald cut decolored stone. So moving forward to how we're doing, this is a snapshot of how we did last year. We had a very strong, stable year. It was one of the best operationally in Karowe's history. We had operating costs that have trended in at the low end of guidance, allowing us to maintain our operating margin of about 60%, despite a very challenging year in the diamond market. And we're pleased to say we outdid our revenue guidance. We set guidance at 170 to 180 million, and we came in at 192. So well surpassing where we did in 2018 as well. What helped that was some record recoveries. For example, we recovered the 241 carat stone, which we sold for over 8 million. And in November, we announced the positive results of our feasibility study to go underground, which I'll talk more about in a bit. Clara, our online digital sales platform, continues to operate well. And every month, we've been able to increase the value and the frequency of sales. So that's going well, and our customer base is now at 30, and we're on our 19th sale. We have a strong balance sheet. We have no debt, close to 5 million of cash, and we were paying a dividend last year, which we suspended in November so we could reinvest the capital in our underground. Our market cap right now is about 330 million Canadian. And this gives you an example. I spoke earlier about what makes our mine special is the consistent recovery of large, high-value diamonds. What's important about this is they contribute about 70% of our revenue, even though they only make up a small amount of the volume. And what we've been happy about is over the last 2 years, you can see from the graph below, the red line gives you an indication of 2019. 2018 and 2019 were 2 record years for special diamond recovery. What this means is it puts us in a different class completely. We are, our average dollar per carat price that we receive is much larger than our peer group and 4 times the global average. A little bit about the diamond market. We started to see a bit of recovery in the last year, which helped us with our revenue number. Other diamond producers are talking about the same. We're starting to see some stability come back into the market. It's too early to call a trend, but we'll see how the next year goes. Fundamentally, also what's going to support us is the fact that there are some major operations now that are coming to the end of their life, and particularly Argyle is closing this year, so we should start to see this gap widen. Operationally, like I said before, we had a strong year. This is a snapshot of how we've done year over year. We surpassed our revenue guidance, and even though our average dollar per carat price came down, we won on carats recovered, which again helped us on our revenue, and our operating margins have been consistent, around 60%, because we've managed to get our operating costs down significantly below guidance. Looking ahead, our carats recovered and costs are going to be relatively consistent from 2019. But our revenue basis, we've increased our guidance to 180 to 210 because our ore mix is going to change. We're actually going to be recovering more from the higher value part of the ore body, the South Lobe. Moving on to the underground, we released the feasibility study in November. The economics are extremely positive. It's going to add about $4 billion of extra revenue, and we took a very conservative look at it. We excluded the exceptional diamond revenue that we've got from stones like the Lesedi. But by excluding that, we ran our value model very conservatively, which means there's an additional $500 million of revenue that we could extract from the underground. This will give you the numbers on a 5% basis. The MPV comes in at $1.2 billion pre-tax, almost $720 million post-tax, and adds $1.2 billion of additional cash flow post-tax. We chose a long-hole shrinkage mining method, which allows us to access the higher value part of the ore body early on, giving us a short payback period of under 3 years. And with operating costs relatively consistent to the open pit, our operating margins are going to maintain to be high. The resource we identified is about 5 million carats. And with the open pit, we've got about 8 million carats left in a resource. The average price we're going to achieve from the underground is going to be much higher than where you've seen us in the open pit because we're going to be 100% on the South Lobe ore body, which is the higher value bit of the ore body. So we realized the price here this year of $468. The underground's going to be about $725. And we took a very conservative approach with the underground. Like I said before, we left out the exceptional revenue, but we also didn't escalate the diamond price in these feasibility numbers, the MPV that you're looking at here. Pre-production capital is going to be about $500 million. And looking ahead, we're going to be investigating our financing options early this year. We are not looking at raising equity. We have no debt on the balance sheet. We're going to be leveraging that. We're looking at options now at about 150 to 200 million on debt. We've earmarked 50 million to spend this year on the early works of the underground, and we're very comfortable we can cover that out of existing cash flow. Clara, our online digital sales platform, which I talked a little bit about before, is taken off very well. It's allowing us to sell rough stones on a stone-by-stone basis individually, allowing our customers not to buy excess inventory that they don't necessarily want or need. And because blockchain is in the platform, provenance is assured. Like I said earlier, the amount of customers has grown significantly. We're now at 30. We've transacted 10.5 million through the platform. We're on our 19th sale, and we are right now in discussions to add third-party supply onto the platform, which we're hoping to make an announcement shortly on, which will diversify the supply and the sales frequency considerably. Just a little bit about this. We're very proud of it, the sustainability action within our company. We are now contributing to 10 out of the 17 UN Sustainable Development Goals, and we are, 2018, we joined the UN Global Compact Initiative. One last word on this, because we keep on hearing a lot about lab-grown diamonds in our industry. This was a report put out last year by TrueCost in conjunction with the DPA. And what they realized from the investigation is that lab-grown diamonds have actually a 3 times greater impact on CO2 emissions than natural diamonds. And our investment is significant at US $16 billion on a net socioeconomic and environmental benefit, and it's not being recognized right now. So in conclusion, we're a high-margin diamond producer in a great low-risk jurisdiction in Botswana. We have a strong balance sheet. We have the potential to double the mine life right now to 2040 with the underground. We have additional growth optionality through Clara, and we're well positioned to take advantage of an increase in diamond prices. Thank you very much.